This channel is for educational purposes only. Please do your own due diligence before making any investment decisions. Hi, welcome back to Invest Like a Pro. This is Joe Rabil, and what I'd like to do today is talk a little bit more about MACD and ADX. I like to use them together. I've got a reason for why I think these two indicators are so powerful. They have a leading component to them, meaning I can see in advance what to expect in a move. So let's go ahead and get into this example because I want to go through this in depth and sort of explain my thinking when it comes to these two indicators and how they relate to the price action. So let's just start with this move to the upside here, moving higher. And when I see a market with this much strength to the upside, we know that the market basically crashed after that. But when I see a new high on the last move, we made a new high going into the last move. I'm not inclined to believe that we're going to start a trend to the downside. This was more of a flush to the downside. And again, anyone who's taken my course would know that this is not actually a reversal in the trend. It's more of a flush to the downside, but it's still, the trend is still up on a bigger picture. So we've got this drop. Now, because this went to a new high and this showed strength to the upside, my inclination is that there's going to be another test coming back up to this high. It doesn't mean we're going to exceed the high, but I'm in the back of my mind, I'm thinking that there's a very good chance we're going to come back up and test this high after a pullback. Now, in this case, we actually went through a market crash, literally showed a lot of selling strength, but look at how the MACD basically came back to the zero line and turned. There were other reasons. This was an undercut pattern. You had to go to a smaller time frame because of the high volatility. So I don't want to get into all that right now. But what I want to point out is that as we move up and we make a new high in a new bull market, look at the strength of this and look at the strength of this. We have confirmation. So I guess the point I want to cover today is that these two indicators are considered lagging indicators to price. Price is going to be, since it's the source of these indicators, is going to be considered the quickest signal. You're going to get the quickest signals using the price action. And so these are derivatives of price. In fact, second and third derivatives of price based on the way they're calculated. They're using other calculations and then adding another calculation to that. So the MACD is using moving averages and then adding a calculation to the moving average. The DI line is using the highs and lows, right? And then ADX is using the difference between the DI lines. So when you start to look at it this way, you realize there's built-in lag. So the question is, how can you use something that has so much lag to it? But because it has a leading indication to it, it has a leading component. When I hit a new high here, I know that if I go through a pullback, there's a very, very high probability we're going to at least come back to that high, if not exceed it. If everything else looks good, then you sort of should expect another new high to develop in the trend if we get confirmation here and confirmation here. Now, when we made a new high here, ADX actually reached almost 50. I mean, that's a very powerful signal. Now, the MACD did not confirm. In this case, we could call this MACD divergence, but I don't really view it that way. I view it as maybe calling for a little bit of a pullback in the trend as opposed to a reversal. If we get divergence in both of these, then you could call it divergence, but divergence does not mean reversal. Divergence just means correction back to support. Now, in this case, we just pulled back to this breakout level. A lot of times when you get divergence, you come back to the prior swing lows or to one of the key moving averages. But as we move on, if you notice here, we actually had a reverse divergence. This made a lower low and this made a higher low. We had no real selling strength during the correction phase. So I know during this phase, it's giving me a leading indication, both of these, that there's more upside coming. right? So I've got a leading indication to the upside. It's giving me help in advance here. And then it's also giving me advance notice here that there's more upside coming based on the selling strength. Now we make another new high. We get confirmation here. We actually make another higher high here. Remember, we're going to compare the most recent peak in MACD, and we do that, and we are making another new high and confirming. And then we pull back, and then look at this. We make a new high here. This does not confirm, and this does not confirm. And we're right around the 25 level. I mean, to me, this is a very important signal when you have a new high in price after an extended run, and ADX can barely get to, or just get to like 26 to the upside, while MACD is diverging, not making a new high with price. I have a leading indication. Yeah, it's a lagging indicator. Both of these are lagging indicators to price, but they're giving me an early warning sign to be on the lookout for a reversal. Now notice what happens. We make a strong move to the downside, confirmed by MACD, confirmed by ADX. Now this time it's based on the selling strength, but this blue line is going up based on the sellers, and we're confirming the downtrend. Then we rally up and we make another new low. We get confirmation here and confirmation here. We have confirmation in the trend. So what does that mean? That means if we get a rally counter to the trend, there's a very high probability we're going to at least come back to this level again after a rally. So that's exactly what we do. We marginally exceed it. This time, MACD does not confirm. ADX does not confirm. So what does that mean? It doesn't necessarily mean reversal, but it means we're going to probably get a decent rally, which we did. We got a decent rally. This did not confirm, right? So then we move up and we come back down again. Now this low is testing this bottom, but we're making a higher bottom and we're holding the signal line on the MACD. That's one sign based on MACD. And then the other one is look at what's going on here. Similar to what happened here on the buy side, look at the sell side, to dramatically losing strength. And we have divergence, divergence, divergence. Once we drop down below 25, you know that there's a very high probability of looking for a reversal. So when we get ADX at or below 25 after being strong during the trend, then we know that we should be on the lookout for some type of a reversal. Well, the same thing just happened here at this bottom. So we should be on the lookout for a reversal. Now we're moving back to the upside. So if you use it as a leading indicator this way, yeah, it is lagging. I mean, it's lagging to price. When you're looking at it in the here and the now, right this second, right here, do we know whether we're confirming or not? Well, to me, it's too early right now. Actually, right now, I can see the green DI is not confirming. But we don't know that until price makes a pivot high. If we make a pivot high here, then I have a pivot high here, and I can compare these two peaks here. I can't compare these two peaks yet because I haven't made a peak yet. I haven't made a top yet. If I keep going here and this turns around and goes to a new high, then you could look back and say there was no divergence. So you got to be careful with this DI line. You notice the MACD is confirming the new high. So use it as a leading indicator, and that means looking in advance. Look in advance of the move. Every time we make a new peak, this is why part of my swing trading approach is making sure I get confirmation from especially the DI, MACD, and with price making a higher high. So keep this in mind when you're going through and looking at ADX and MACD. Don't think about it in the here and the now necessarily. Think about it as what was it telling you prior to? What was it saying? You know, like if I'm pulling back here, what is the ADX and the MACD telling me? Well, this is pretty bullish, right? We're trying to cross above the zero line. This has a really good slope. You see how the signal line has really good slope to it? And we're getting a pinch developing right at the moving averages as this is trying to cross above. I think that's a pretty solid signal, especially considering we just broke the downtrend line. So I have that. And then this here, on this move to the upside, green DI made a higher high here, higher high here. ADX is going to have some lag to it at the reversal. So I'll lean at a reversal, I will lean on the DI lines. And this makes a dramatic new high that confirms this peak. So I'm thinking a higher high is coming based on the DI action, right? So we're starting to get this ADX going. If that can cross above 25, then we have some confirmation that on a pullback, we could get another test of the high. Right now, we don't have that yet. All right, so keep these things in mind as you're going through these things. You use these two indicators that way, and I think it'll help you in a significant way. All right, let me know if you have any questions. Thanks.